What's going on, everybody? And in this video we are going to be talking about two safer dividend stocks. Now these two stocks are actually very similar, so we're going to be doing a comparison over these two dividend stocks and my personal opinion on which one I would rather invest in. But everybody has different investment strategies, so we'll look at the pros and the cons of both these companies. And before I go any further in this video, I'll ask if you enjoy dividend stocks and you like dividend investing, liking to make passive income within the market, make sure to subscribe to this channel and you turn on post notifications for videos coming out every Monday, Wednesday, and Friday. Thank you so much. Give the video a thumbs up and leave a comment below which of these two dividend stocks you think is the better buy in your opinion. Now let's get into this video. So as I'm making this, it's 1:40 p.m. Central Time in the United States, and my portfolio is doing very good over the past week, up $422, which is a 4.24% return in just 1 week. Now today we're up 1.2%, and the entire market is pretty much doing pretty good. It's pretty green right now. Now, before I go into these two dividend stocks, I will mention that I am currently not invested in either of these two stocks. We'll go over why that is in a deeper analysis later in the video, but the main reason is just because I don't see them fitting my investment thesis, my investment style, because I am a younger investor and I'm aiming for more growth. And these are going to be more your slower growing, but safer picks. Now let's get into these two stocks. And they are actually going to be CVS Health Corporation and Walgreens. Now we'll go into both of these two stocks, but enough of the talk on let's just talk about these two different stocks. So CVS, as we can see, trades for $102.06 per share. They're up 0.74% on the day. They have a dividend yield of 2.17%, which is very solid. They pay out $2.20 per share on an annual basis. Now their dividend grades are pretty good. We can see they have a B on the safety, a B- on the dividend growth, and an A- on the dividend yield, which we'd really like to see anything above an A-, A- and above. So they have a payout ratio right here of 27.41%. They pay these dividends on a quarterly basis, and their next payout is going to be in February. So if you buy anytime before January 20th of 2022, so you got about less than a month to get in on this stock if you want to, you'll be getting paid out that quarterly dividend of 55 cents. Now, what kind of caught me off guard is CVS's dividend growth is 0 years, which I'm a dividend growth investor. I like to have growth. So if we go to their dividend history and we just look at this, what we'll see is it's an F on consecutive years of dividend growth. Now, we can just see 50, 50, 50, 50. They've been paying out 50 cents per share for a while. However, they just announced a 55-cent dividend, so that's pretty good stuff to see. CVS performance over the past few weeks is up 1.13% over the past week, up 11% this past month, which is insane gains. Over the past 3 months, up 20%. Past year, up just below 50%, which is an incredible return. And over the past 5 years, this stock is up 29.15%. So make sure to always look at the historical trends on how the stock performs, because from 2017 all the way until like 2020, they were down. They were down like 23%. And then they started to do really good. I think a few things that have spiked this company is COVID, and it's actually benefited them because they get to do testing and vaccines and different things like that. So now let's go into Walgreens and just a little bit of a first off analysis on Walgreens. Now, this stock trades for $50.71, and they are actually smaller than CVS. Walgreens has a market cap of $46.61 billion, while CVS has a market cap of $133.83 billion. But Walgreens does pay a nicer dividend yield of 3.78%, and they pay out $1.91 per share on an annual basis. They have a PE of 10.19, while CVS has a forward PE of 12.62. Now, if we go into Walgreens dividend grades, they have a C+ for dividend safety, a B- for dividend growth, and an A for a dividend yield. They have a dividend growth record of 6 years in a row, a 5-year growth rate of 5.15%, which is pretty solid, especially for a safer dividend stock. And they have a payout ratio of 38.54%, which is a little bit higher than CVS. However, you are getting a higher dividend yield, so it's worth it. And 38.54%, that's really sustainable. Nothing to worry about right there. Ex-dividend date, we missed it on Walgreens, but we still have upcoming dividends because they pay out on a quarterly basis. Now, over the past year, Walgreens is up 27.77%. So these stocks are really volatile. Like, if you ask me, like, this is volatility. 39 to 48 to 54, then back down 51 to 55, and then going all the way down in the year to 43. This is volatility at its finest. But long-term trend seems to not be that good. Walgreens is a stock that, I'm just going to give you a little spoiler. Choosing from both of these two stocks, I like CVS a lot more. But I'm not invested in either of these companies. They were $87 a share, and then they've been downtrending. Now, COVID, ever since about 2020, they started to pick up, but they're still not beating the long term, so not looking too solid. Let's talk about some more stuff on these companies. Now, CVS's Statistics, they have a profit margin of 2.67% and an operating margin of 4.68%. Quarterly revenue growth and earnings growth are pretty solid at 10% year over year and 30.6% year over year. Now, we go on to Walgreens Statistics. Actually, let's just go through CVS as a whole. One thing, I know this is a little different, but I looked at the full-time employees on CVS, and they had 213,000 full-time employees. Now, if we want to go look at Walgreens full-time employees, what we're going to see is they have 202,000. What concerned me and just kind of struck something in my mind, and it could be just me thinking twice about this, is Walgreens is like 3 times as small as CVS. However, CVS is doing all their functions with just basically the same amount of people. So that's one thing to keep in mind is Walgreens using their financials steadily, and are they paying too many employees? That's one thing that I was thinking about. But let's go into CVS's financials. What we'll see is that consistent growth year over year. We're looking at a very, very solid revenue growth. Net income continues to grow as well. I really like to see that, except for 2018 was a little bit of a spicy year, so not exactly sure why that is. Balance sheet, very solid. More assets and liabilities, that's what we really, really like to see. And the company's cash flow is looking very solid. Cash flow growing year over year. Free cash flow, incredible stuff. Now, their analysis, earnings expected to grow, sales expected to grow, we really like to see, and they are rated a 2.1 on the buy. Now, what I really did like to see was the results center. Now, they made $73.8 billion in revenue for the quarter three of 2021, and they made an adjusted earnings per share of $1.97. So we see right here, if we go to their dividend, how much are they paying on an annual basis? They're paying out $2.20. They almost made that in one quarter. So that's very sustainable, and they have potential to pay out more to shareholders and to pay more into the business to grow that. Now let's go into Walgreens statistics. Walgreens only has a profit margin of 1.92% and an operating margin of 2.77%. Revenue and quarterly earnings growth are growing at faster rates, however, but let's go into some more stuff. Now, Walgreens revenue is kind of all over the place, going uptrending and then downtrending since 2020, which you'd expect them to be making more revenue with COVID and different things happening. So I don't really like to see that, in my personal opinion. Now, let's go into some more stuff. How is their net income performing? It's doing all right. They are making profits, but it's kind of all over the place. It's not doing near as well as it was in 2018. Balance sheet for Walgreens, looking pretty good. More assets and liabilities. Now the cash flow. Let's talk about the cash flow. It's doing all right. Free cash flow has grown since 2019, but it's not at 2018 levels, so it does strike some concern. If I were looking to actually invest in this company, I would look deeper into that. Let's go on to the analysis. This is another thing that kind of concerned me. Their sales growth estimate from 2021 to 2022 is not expected to grow. It's actually expected to decrease by 1.8%. And usually, as a company's revenue decreases, so does their stock price. So that is one thing to keep in mind, not providing as much value as they could to shareholders. However, earnings are expected to increase, which is pretty solid stuff. And from 2022 to 2023, there is expectations for revenue growth. They are currently rated on Yahoo Finance at a 3 for a hold, so not as good as CVS. But let's go into some fair value estimates. Now, CVS is trading below their fair value estimate of $108, $7 below it. Actually $6 because now they trade for $102. So looking pretty good. Now let's look on Walgreens. Walgreens is trading a little bit above their fair value of $44 a share. That's something to keep in mind. How are institutions playing this? Institutions are pouring a lot more money into CVS, $10.9 billion being bought in, only $7.3 billion being sold out. So more buying than selling. On Walgreens, on the other hand, we're seeing the same, more inflow than outflow, but institutions seem to be a little bit more bullish on CVS just by the math, didn't do it in your head. Now let's talk about the price targets on both these companies. On CVS, max forecast upwards of 23% and a minimum of 13%. Average forecast gives them a 5.27% return. These are all 12-month price targets. Now, they are rated a strong buy based on 18 different analysts. 9 strong buy, 6 buy, and 3 hold. 0 saying to sell and 0 saying a strong sell. If we go on to Walgreens analyst, we have 1 strong sell, 3 hold, and 1 buy. Minimum forecast is a negative 4.91% return with a max of only 8.95%. And the overall thesis is that Walgreens is a hold. So in my humble opinion, I'm looking more towards seeing CVS as the better buy. Now remember, that is not financial advice. Just looking on different things from Walgreens, I think that CVS is a better buy. I believe they provide better shareholder value and they provide better returns. And I'm not saying historical performance does equal future performance, but that seems to be the trend that we're going to see within both these companies, especially as CVS kind of has market dominance. In this market, I believe that CVS is the better bet. But everybody, that's what I have for you in this video. So if you enjoyed it, make sure you give this video a thumbs up and you subscribe. You turn on post notifications for videos coming out Monday, Wednesday, Friday. You don't want to miss out on any future videos. I'm providing as much value as I potentially can. Check out M1 Finance if you'd like. You can use the link in the description below and get a free $50 by signing up and depositing $100 into your account. It's a free 50% ROI. Thank you so much for making it to the end of this video, and I will see you at the next one.